Hi there, welcome to Kneppy Invest and welcome to October 16, 2024. We have about 37 minutes left of trading today. It's been a dull grey day in Brisbane, weather-wise. It's also been a dull grey day for the ASX. So I'm seeing a lot of red in the indices. Now, it could have been worse because we had the lead in from Wall Street. Nasdaq was down 1.37%. Dow Jones Industrial was down about 0.7%. So I thought we might have had a bit of a worse day than what we're seeing. ASX 200 only down 0.26%. That's the XJO. Small caps down 0.54%. I expected the All Tech to be down by more than 1%, only down 0.81%. And I never have expectations when it comes to resources. Down 0.41%. That could be up a lot, down a lot, and I have no clue which way it's going to go. Anyway, so the agenda for today's video will go through the ASX today, looking at the best and worst performing sectors, indices, and also companies. Then we'll have a look at the top 5 stocks of the day. I have come up with the top 5. Some big companies, mining companies in this top 5. A lot of companies did not make it, and I won't do what I've done in previous videos and go through these companies, but I will talk about which companies did not make it. So if you do hear a company you are interested about, have a closer look at the announcement that company has released and maybe even the chart if that's your thing. And then once we go or have done the top 5 stocks of the day, I might have a look at some of your comments because I've neglected that for a few days and someone is keeps on sending me the same comment or question over and over again in each video I do release. Okay, so before we get to the ASX today, I'm just going to go to Trading Economics and Capital Brief just to see if there's been any news flow today that have explained what's happened on the ASX or any news from individual companies that I might have missed, particularly the bigger companies, which Capital Brief does. Okay, so let's go to Trading Economics. Asian markets mostly tumble. Asian equity markets mostly fell sharply on Wednesday, tracking Wall Street as lower as investors navigated the earnings season and geared up for the US presidential election. It's really funny. Whenever the market goes up or down, the media has to come up with a reason why it's gone up and down. And I'd say 90% of the time, maybe not 90, I reckon about 50% of the time, they're just making stuff up. They have no idea. Sometimes we just don't know why it's gone up or down. Oil rises on technical rebound. So that's the same sort of thing. Oil rising today, there's no logical reason. So it must be technical rebound. Japan machinery orders fall more than expected. I suppose that's a little bit negative. South Korea jobless rate rises to 2.5% in September. I suppose that's slightly negative. New Zealand inflation slows to 2021's lows. I suppose that's a little bit positive. And US one-year inflation expectations steady at 3%. Factory activity in New York posts surprise decline. And that's not positive. Now let's go to Capital Brief. And actually, before that, commodities, I'm not sure when this starts. Does it start at midnight? Is it Greenwich Mean Time? I have no idea. I should find that out. When do the charts start anew? Or they're not the charts. The day starts anew for the commodities. So we can see soybeans is up 0.86%. But is that in the last hour or is that the last 23 hours? So that's something I probably should find out. Anyway, let's go to the Capital Brief just to see if there's been any announcements from companies or any news flow from the companies that I might have missed. So apparently uranium stocks are down as Kazatomprom agrees asset sale. So obviously that's in Kazakhstan. I'm just going to have a look at some of the uranium companies. Boss. Oh, yeah, that is down. That is down, yeah. I'll give them that. Paladin. Bannerman. Yep. Peninsula. Now, why am I doing this? I have a uranium watch list. Think, Michael, think. Be smarter. And yes, lots of red in uranium. Few uranium companies up. Berkeley's up. Yeah, Peninsula's up. I do have a feeling Peninsula released an announcement today. Yeah, Lance Construction accelerates towards fourth quarter production restart. Even though on TradingView share price is up, on ComSec it's not up. It's at 10 cents, which is a very important level, by the way. Let's go back to Capital Brief. Evolution Mining leads ASX gold surge. And funny enough, Evolution Mining is my top stock of the day. They did release their quarter report, and the market has liked it a lot. Albanese talks about defending his beachfront home purchase. Challenger shares fall on first quarter sales hit. Oh, Challenger did not make it in my top 5. I was thinking about putting it there. So I'll have a look at the chart for Challenger. How's that? So some of these companies that did not make it, maybe I'll just have a look at the chart. Sky City to pay $13.1 million casino duty after High Court ruling. Rio Tinto shares fall on disappointing third quarter production. And Rio Tinto made it into my top 5 stocks of the day. And one of the reasons is because they released their quarterly activities report, and also it's a pretty big company on the ASX, and the share price was down. Bapcor shares slide on recent sales slowdown. Bapcor had the AGM today. It did not get close to making it in my top 5 stocks of the day. And what else? Oh, Bank of Queensland shares lift on better than expected financial year results. So I did include this in my top 5 stocks. And it's really funny because I had all the results or the numbers, and I went, oh, that's pretty ugly. And then I saw the share price was up, and I went, well, even though the results are ugly, it's better than what the market expected, which is so weird. You see really bad results or really ugly numbers, yet the share price rose. So the market was expecting worse. Funnily enough, Woodside lifts after record quarterly performance. So that is a company that almost made it into my top 5. And I'll have a look at the chart for Woodside towards the end of the video. ProMedica shares rise on a 32 million contract extension. Yeah, let's have a look at the chart for that company as well. I didn't even put this company down as a possible inclusion in my top 5 for some reason. Okay, so more about Bapcor and Woodside and Challenger. Just going, looks like they're just repeating. Oh, this is like before market had even opened. Okay, so let's get to the ASX today. Let's have a look at the best and worst performing sectors and indices. And honestly, it's been a pretty bad day. Real estate and financials up a little bit. And I would say the banks have, the performance of the banks today is probably the reason why we're not down as much. Financials up 0.2%. And the third best performing sector, materials, is down 0.37%. IT, staples, healthcare have had a bad day today. And if we turn our attention to the indices, gold's had a really good day. So up 2.64%. And again, just like financials. So gold and maybe the banks have done heavy lifting on the ASX today. And the ASX 20 is down 0.19%. So I am assuming as we open up the ASX 20 that the banks, maybe 3 of the banks are up. And I'm going to say 6 companies up, 14 down. Oh, close. 7 up, 13 down. So let's have a look at which companies are up today. Woodside. So they actually did release that report, and I thought it was pretty good. It beat my expectations, but my expectations for Woodside are pretty low. ANZ, NAB, and Westpac. They are 3 of the best performing companies of the day. And Commonwealth Bank is also up. REA Group, Goodman Group, and there's Aristocrat. The worst performing companies, WiseTech, which is not surprising. It is a tech company. And so the reason they're down is because of NASDAQ. Okay, now let's get to individual companies. Which companies have performed really well today? What announcements have I completely missed? That's one of the reasons I go through this. I just want to see which companies have really taken off, and then obviously they've released something. For instance, a company called Mako Gold, probably nothing to do with Mako Sharks, but their share price is up 63% today on actually pretty good turnover, fairly small company. So let's have a look at this company called Mako Gold. I am assuming they are a gold exploring company, and I'm assuming they've released some drilling results the market has liked. Now, I could be completely wrong, and I am wrong. So this is a recommended takeover of Mako Gold by Aurum Resources, and sometimes that's going to happen. So let's have a quick look at Mako Gold chart. And, well, that's 5-minute chart. Okay. And, yeah, before this particular announcement, ugly. Again, I'd say this is an opportunistic takeover. Aurum has seen some value in this company because the share price is down near the lows, all-time lows for the company. And was Aurum, for some reason I know this company, Aurum. Now, that's the wrong ticker code. What is the ticker code for Aurum Resources? I could just actually do this. AUE. Come on. let's not have all vowels in the ticker code of a company. Put at least one constant in there, constant, whatever it's called. This chart looks, this is probably why I do know this company. This chart looks pretty good. So two things I like about this chart. Share price in an obvious uptrend. The other thing is I like the increase in volume. You just see a steady increase in volume through time. And the last two spikes, the big spikes in volume, have been recently as well. So this is telling me that the market is becoming more and more interested in this company. And because the market is becoming more and more interested, the share price keeps on rising. Share price has gone from about 16 cents up to 42 cents. Share price down a little bit today, 10.64%, probably because of this takeover. Okay, so maybe this is the buy the dip situation for this company. Other than that, I know nothing about Aurum. More than likely, they're a gold exploring company. Do they have any production? No. Based off TradingView income statement, they have no revenue. Let's go back to the list. Nyrada actually did release something, and I did not write the ticker code for this company down, so did not get close to making it into my top 5 stocks of the day. Share price has been all over the place, generally up over the last few weeks, and they did release something today. What was it? Let's have a look. Nyrada completes safety studies ahead of phase 1 clinical trial. And more than likely, this is the reason why, just the feel of this announcement is the reason why I didn't even put it onto my possibles. It's not the sort of announcement that will excite me. Just completed safety studies. So what? That's for me. But the market is thinking differently. They like it. Maybe it's just because there is positive sentiment in this company right now. And this was sort of like a little bit of a shot to that a positive shot to that positive sentiment. So let's have a look at chart for Nyrada. Yeah, so they had a little bit of a breakout the other day, 1st of October. So that's 2 weeks ago now. And it's been going up and down since then. And today is a positive day. So this could be adding to the breakout we've seen for this company over the last few weeks. So looking better for Nyrada, but it is still a story stock. And I am personally trying to stay away from story stocks more than I have in the past. Anyway, let's go back to the top gainers. We have a company called Rare Foods, but the turnover is $873, so we can just move on. Perpetual Resources, some pretty good turnover there. I'm going to have a quick look at this one, just because the turnover was pretty good, but that doesn't mean anything sometimes. Yeah, and they've released nothing since the 1st of October. Multiple spodumene trends confirmed at Isabella. Have a quick look at the chart. So maybe this company share price is in an uptrend, and this could be some more positive moves for the company, and the answer to that is no. Anything else here? Let's move down the list. And African Gold has been all over the place the last few days. Made it into my top 5 stocks the other day. Which day was that? Was that yesterday? It wasn't. Yeah, it was yesterday. There you go. It's up again today. I thought it was like 2 days ago. Once you get older, you just lose all track of time. Okay, so let's have a look at top gainers by market cap. There's Evolution Mining, up 6.18%. And that's the main reason it did make it my top 5 stocks. The market did like their quarterly report. And there's Bank of Queensland, up 5.9%. Otherwise, Superloop, another really good day. What's going on there? Don't know. 4DS Memory did release their Appendix 4C today. I had a quick look because I always have a look at Appendix 4Cs. They have no cash receipts. So I just said, move on to the next one. So share price up 4.71%. Oh, it's fallen a little bit. Titomic have done a capital raising. And sometimes that can be a surprise when the share price is up after capital raising. And there's Pioneer Credit and Lunan. So I'm not trading many story stocks, but I am trading London Metals right now. And Pioneer Credit up 12%. I'll have a look at the chart for Pioneer Credit. This is one of the companies that I do think there is possible value. And I think just being patient with that company might be worthwhile. Could be beneficial. So I'll have a look at that chart for that company. Okay, so nothing much there to really discuss, except for the companies that are in my top 5 stocks today. So let's have a look at the worst performing companies. And I don't think, I'm not sure if there's any companies. No, there won't be. Double Down, capital raising yesterday. Somnomed, Vertos, which is phosphate, I believe. Nothing of note here. Atomos down 11.43%. BrainChip down again. Maybe we should have a look at the chart for this company. Well, I was not going to show any charts, and now I'm going to show you a lot of charts. I've got actually 5 lined up. But there's nothing really to speak about here. So let's have a look at worst performance by market cap. Mesoblast, Drone Shield. Oh, that's another chart I want to show or want to look at. Drone Shield is down to just above $1. I'm not really following Drone Shield all that much now. Yeah, I've just lost interest. Centaurus Metals did release something today, and share price is down about 7%. So this must have been a little bit negative. What was it? Extensive copper gold mineralization intersected at Boy Novo. And obviously the market didn't like it. And if we have a look at the chart, maybe nickel's down, don't know. When we have a look at the chart, it did look interesting. It looked like it wanted it almost, this is like a false break. There was a possible breakout 2 days ago, like the Monday. Yesterday, it was actually an ugly looking candlestick, and today it's fallen below. So even though they did release an announcement today, it may not be the reason why the share price is down. It could just be because the share price failed to break out yesterday. Maybe not yesterday, but the candlestick looked ugly, and today was like a confirmation that the breakout is failing for Centaurus Metals. And let's go back through the list. And that's it, I think. Yep, that's it. Okay, so let's get to the top 5 stocks of the day. I'm not going to actually, before I do that, I'll just just name some of the companies that did not make it in my top 5. I sort of already mentioned a few of them. So that's Challenger, Aurora, ORA, Catalyst Metals, Babcock, Clinuvel. In fact, I might just have a very quick look at Clinuvel in a second. Antio Diagnostics, they released an announcement yesterday, and they went into trending hot today to clarify something about the announcement they released yesterday. I've already mentioned Woodside. Doug Technology has gone to a trending hot to do a capital raising. I'm not sure if I like that. A company called IMR, IMR, did release their Appendix 4C. IMR. No interest for me in this company right now. They have a very high market cap, 151 million, and receipts have been flat over the last 5 years. I want to see some proof the company can grow their receipts and their revenue. The Reject Shop had their AGM, and I believe Origin had their AGM. I wrote down Origin, but I didn't write down a reason why. Did they have their AGM today? Results of meeting. Annual general meeting. So sometimes, or many times, a company will release some form of trading update when they do have their AGM, and that is why sometimes during this time of year, you will see the share price of a company rally or fall when they have their AGM, just because more than likely they have released a trading update. Okay, so let's get into the top 5 stocks of the day. But for that, Bitcoin, and I'll talk about Clinuvel as well. Why do I want to talk about Bitcoin? Because they had a really interesting night. And the reason I know they had an interesting night is because there was a lot of Twitter chatter about Bitcoin's big drop today. And obviously these people are either short Bitcoin or they're anti-Bitcoin. And the whole reason I say that is, if you have a look at the 5-minute chart today for Bitcoin, there was a massive drop between midnight, right on midnight, and about 1. So in a 1 hour period, the price of Bitcoin went from 67,000 all the way down to 64,000 and a bit. And you just see it rallied just before that, and then it just fell off a cliff. And a lot of these tweets were released about 1 a.m. when Bitcoin was near the bottom. And most of these tweets were being fairly harsh on Bitcoin. There was just some ridiculous tweets out there. And look what's happened to Bitcoin since then. It's actually gone back up. And it's getting actually closer to the highs that we saw just before that big plunge. So apparently that plunge was like one institution selling some Bitcoin. That was all it was. They were just dumping it on market. And then when they stopped dumping, the price of Bitcoin rallied. So you sometimes can see that even with individual companies. If an institution just dumps on market, you will see the share price fall, and it can fall quite a bit. You don't see a lot, but you definitely can see it, or do see it. And the other one I just wanted to talk about was Clinuvel. So down a little bit, not sure. So they had their AGM as well, looks like. And I actually had a look at the presentation. And it seems like this is just me. I am a shareholder, but it seems like they're a little bit obsessed about where the share price and the valuation of the company is right now. The whole reason I say that, for some reason, they're talking about institutional ownership, how that's increased. I don't really care about that. Well, it can be beneficial over time, but the share price of this company has not risen over the last few years. So increase in institutional ownership has not benefited Clinuvel one bit. So it's not a benefit for this company right now. So a lot of times when institutions increase their holding in a company over time, the share price will rally. But in this case, no. But the reason I just found this presentation fascinating is instead of talking about the company, they're talking about the valuation of the company compared to fundamentals in this case. And I actually understand where they're coming from. So not that long ago, the PE ratio of this company was well above 50. Now it's 20. It's looking cheap. And the company keeps on growing. So there is a bit of disconnect between the market and this company. And value to profitability, correlation between market value and profitability, and correlation between market value and earnings growth over 7 years. So it seems like they're putting all this work into showing the market that this company might be undervalued, and they're not even talking about the company at this point, and emerging value. So then they start talking about the company a little bit more. So I found that presentation fascinating, but I understand where they're coming from. I do think Clinuvel is undervalued right now, but for some reason, the market just doesn't like this company. There's just so much negative sentiment in this company, and negative sentiment can drive the share price below not true value, below where it should be valued, and well below where it should be valued, and that does lead to opportunities for us to buy into these companies. So I'm not saying Clinuvel is a good company to buy right now. In fact, if I thought it was really, really cheap, I'd probably buy some. But I'm just waiting for the sentiment to shift because the share price has been a downtrend for a long time, and there's no signs of the sentiment shifting or the trend of share price shifting. Whenever there is a bit of a sign, the sellers come in force and just start dumping shares on the market. Anyway, no interest in trading Clinuvel just now. Okay, now it's time to get to the top 5 stocks of the day. We'll start off with Rio Tinto. Rio Tinto down 1.5%. Not a lot. Funny enough, there was this disappointing article in Capital Brief. That was not management saying third quarter production was disappointing. That was an analysis, and that analysis is, where is it? City Analysis noted that Rio's disappointing production report compounded recent criticism by investors for offering an unnecessarily full price to Arcadium shareholders through its acquisition of the lithium producer. So it seems like maybe some investors are not happy with Rio Tinto's acquisition. Can't even say that word. Acquisition of Arcadium. Now, I thought they're doing the right thing. This is what they should do. They should look for distressed assets or buy other mining companies when we're at the bottom of the cycle. And you could argue that lithium is at the bottom of the cycle. And this is exactly what Rio Tinto should do right now. But it seems like some investors are not happy with that. Now, to be honest with you, it's very hard to please all shareholders. I'm going to say that right now. Anyway, I had a very quick look at their third quarter production results. But the most important thing is how these production results are compared to expectations from the company and even analysis. So it seems like the City Analysis said they were disappointing. So these net numbers came in a little bit below expectations. And if you have a look at the first 9 months of 2024 compared to the first 9 months of 2023, we see a few negative percentages there. So Pilbara iron ore production down 1%, titanium dioxide slag down 10%, mine copper up 8%. But the main thing is iron ore. It was down a little bit. Not a lot, but a little bit. And that's why the share price is down. It's not down a lot. And let's have a look at the chart for Rio Tinto. And this is an iron ore company. You might argue, and I have heard some people try to argue, not only Rio Tinto, but also definitely BHP, that they're more than an iron ore company. I say no. You will see a really strong correlation between iron ore prices and BHP and Rio Tinto's share price. They move with iron ore. They don't move with copper. They don't move with uranium, anything like that. They move with iron ore. The iron ore is the commodities for both of these companies. I understand that BHP is trying to diversify, but they're still an iron ore company. And this is a chart for Rio Tinto. In fact, let's do it. Let's have a look at iron ore. I forget which one it is. 2. And what I'll do is, yeah, so this is Rio Tinto chart with iron ore on top of it. I'm going to get rid of all these moving averages. And over time, there's a pretty easy to see correlation. It's not absolutely perfect, but it's pretty easy that there is definitely a bit of correlation there. In fact, if you just hone in the last few years, yeah, it's almost a perfect correlation. So that's Rio Tinto. And the same thing happened, or you'll be able to see if you do the same, or do the same thing with BHP. BHP moves with iron ore prices. Not perfectly, but it is the main driver for BHP. Okay, let's get rid of that. Get rid of, put you back and put these back in. So let's have a look at Rio Tinto's chart. A lot of volatility over the last few months. And it's just moving up and down with iron ore. So whatever you think about iron ore is important when it comes to these sort of companies. It's one of the reasons why I don't really like mining companies as long-term investments, just because I have no view about the long-term price of any commodity with any confidence anyway. You could say gold over time will go up, but who knows? Who knows? That could be wrong. So that's Rio Tinto coming in at number. It's really weird. The title of this document says Q3 QOR 2024. That's Qoria, which is a company I'll be looking at in today's video. Okay, so that's Rio Tinto coming in number 5. Coming in number 4, Bank of Queensland. Share price up 6.38%. They released their results today. I had a look at their appendix, the financial. I look at the appendix 4E and then their financial year 24 results announcement. The first thing I noticed when I have a look at some of these numbers is there's not much positive there. Not much positive. Now, in saying that, I had no idea what the expectations were, but statutory net profit after tax up 130%. So if you just looked at that, you'd go, this is the greatest results of history, but you don't look at statutory net profit after tax because usually you have one-offs. And last year, looks like the profit of BOQ was down a lot. This year it's up because there's none of those one-offs. Cash earnings after tax, down 24%. Ew. Net interest margins, down 13 basis points to 1.56%. Ew. Housing lending growth, down to 2%. Ew. Business lending growth, up 2%. Okay, that's okay. Dividend per share, 34 cents. Is that down or up? Don't know. Cash earnings per ordinary share, down 24%. Cash operating expenses, up 6%. Well, actually, you want that down, not up. Cash return on average equity or return on equity, 5.7%. Ew, down 160 basis points. Ew. Common equity tier 1 ratio, 10.7%, down 25 basis points. So I had a look at this little table and I went, ooh, these are ugly numbers. But I also realized that maybe these were better than expected. And that sort of was confirmation when I saw the share price up. Share price up because the market thought the results were going to be worse. Just think of that. The market thought the results were going to be worse than what they delivered. So the share price is up. Not sure if those results are a reason to get excited at all when it comes to Bank of Queensland. And let's have a look at the chart. Okay, here where it becomes interesting. One of the reasons I go through this process is I look for companies whose share price is breaking out on the back of positive financial news. So what we have today with Bank of Queensland, positive financial news, even though the numbers look pretty bad, it was better than expected. We had a significant increase in volume. Look at the volume today. The highest volume this company has seen since April. Not sure what happened on April the 17th. And then going all the way back to the 11th of October last year when they probably released last year's results. On that day, share price dropped 7.44%. Continued to fall over the next month or so, but that was near the low. So the other thing I look for is the share price at least a 3-month high, preferably a 6-month high or even a 1-year high, And with the share price at 665, the last time the share price was this high was way back in March 2023. So we're talking about 18 months ago. This is the sort of chart I'm always looking for. This is a breakout chart. And even though the results look terrible, better than expected terrible, I should keep my bias out of it because I like this chart. I like this chart. Will I trade it? Don't know yet. Anyway, that's Bank of Queensland. A possible breakout. The whole point of me doing this video, going through this process, is I'm looking for possible breakouts. Okay, so that's Bank of Queensland. Maybe should be the #1 company today just because of the chart. Coming number 3, we have a company called Harmoney, up 12.2%. I don't remember this company in the top gainers of the day. Oh, okay, that's because I did not show all companies. There it is. Pioneer Credit, Harmoney. There's sort of a theme there. Pioneer Credit, Harmoney Group. Wonder what Money Me's done today. A company called Sequos Group is up 10%. They actually did release something. Okay, so Harmoney is sort of a lender, a small lender. I'm not sure what they lend, but they did release a trading update today. On track to 20% cash return on equity run rate the second half of 2025. I actually didn't mind this particular announcement. Now, this company is fairly small, I believe. How small? I don't know. Let's go back down. This company has a market cap of, you know what I could do? Just do this. Harmoney has a market cap of 42 million. And if we go back to this, they do have some expectations. So they talk about loan book, Australian loan book, New Zealand loan book, net interest margin. So some of these are down. For instance, New Zealand loan book down. So Australian loan book is up about 12%, but net interest margin down slightly by 0.1% or 10 basis points. Credit loss down. Oh, is that up? No, that's up. Risk adjusted income down. 90 plus days arrears up a little bit. Cost to income up a little bit. Now, the director and CEO said they had a strong start to financial year 25 and remain on track for achieving a target of 20% cash return on equity run rate in the second half of financial year 25, which I've already mentioned. So if they can achieve that, this company is looking interesting. And I can't remember if I read anything else here. No, I did not. So when I read this, I wasn't sure what to think of it. I thought, oh, it looks pretty good. But then I saw the share price was up about 10%. I went, oh, okay. So what I thought was positive, the market has also thought it's positive. So let's have a little chart for Harmoney. Is this the second breakout of the day? I have a feeling no. But I don't know. I haven't looked at the chart yet. No, it's well away from that. And that's probably understandable because I can't remember looking at this chart for a while. And even though share price has rallied a little bit today, it's not looking anywhere near as good as, say, Pioneer Credit. Not exactly the same sort of companies, but they were sort of linked together in that top gainers list. So Pioneer Credit. Yeah, this chart looks much better. And even Money Me, which is the same sort of area. I'm not sure if they are competitors, but this chart definitely looks a little bit better as well. In fact, let's go back to Harmoney. They do lend. We already know that. But who do they lend to? Is it, let's have a look. Harmoney provides customers with unsecured and secured personal loans, which makes sense, that are fast, easy, competitively priced, and accessed 100% online. Proprietary digital lending platform Stellar. Stellar with an E at the end. Okay, so an okay announcement from the company, but the chart looks not what I want to see. So that's coming in number 3 with Harmoney. Coming in number 2, an Appendix 4C announcement or release, and that's from Qoria. Share price down. Oh, we're at closing auction. Down to 43.5 cents. Okay, this is really interesting because I'm going to show you their cash flow report. I saw this and I went, oh, wow, interesting. I think the share price might be up a lot today on the back of this. And of course, it's not up a lot because we've seen it's actually down. The reason I got a little bit excited, and this company initially was going to be the top stock of the day. And this is the reason why. So this is Old Family Zone. They protect kiddies from the evils of the internet, or something like that anyway. Receipts to customers, 37.5 million. Operating cash flow positive, 14.6 million. I was like, what? Operating cash flow positive, 14.6 million. I was like, ooh, that's so exciting. And then I went to the next one, the investing activity. So they do spend a bit of money on capital expenditure and non-current assets. I would assume that is capitalized research and development, almost $5 million. So free cash flow positive by about, what was it, $7 million or so. How much cash they have? 18 or 19 million cash on hand. And the other thing I like to look at is debt. They do have a bit of debt, $50.5 million of debt. But the last thing I want to show you is the cash receipts history. And this is very important. So this is Qoria. And I'm getting the little, I just want to increase the size of this. Why is it just lagging? Don't lag. I'm just going to lift that. Okay, so this is Qoria. Cash receipts history going all the way back to 2016. Yes, I've been following this company. That's probably when they listed. And when they listed, that first quarter, they had $5,000 in receipts. So you can see a steady climb. Went from $5,000 to $1 million of receipts in the April quarter of 2018. And you can see a really rapid increase in receipts over the last few years. But the one thing I noticed when I looked at this is the September quarter tends to be their best quarter for receipts. And then we see receipts back away. So there is a bit of seasonality here. And usually this quarter is the best quarter. And I think the market knew about that. So the market was expecting a really good quarter. And that's one of the reasons why the share price had really taken off the last few days. We'll have a look at the chart in a second. We saw the share price just, wouldn't say go rampant, but there was, I think, some very savvy investors taking position in this company before they released their Appendix 4C because they just knew it was going to look pretty good. And it did look good. But there is a bit of seasonality. Now, in saying all that, if we compare this quarter to the previous corresponding period, which was the September quarter last year, much better. So I think they have reached an inflection point. The reason I say that, I went back to the commentary. So funny enough, operating cash flow, 14.6 million. Free cash flow, 8.5 million. So the previous corresponding period, operating cash flow positive by 2.1 million and free cash flow negative by 0.5 million. So you can just see in the last year, the September quarter has significantly improved. And that's another one reasons why I think the chart does look pretty good. Tesla students now 20% on Qoria platform because those Texan people really want to protect their kiddies from the evils of the internet. And there's some other really interesting things in this. Not there. And not there. ARR growth, not there. SaaS metrics. You can have a look at SaaS metrics. Some of these are fairly important, but I'm just going to move on. Cash collections. In fact, you can see the seasonality right here. September quarter, much bigger than the December, March, and June quarter. And June quarter tends to be their weakest quarter. So they went from the weakest quarter to the best quarter. Operating cash flow, going last few quarters. Cash collections, you can see a massive spike there. So the last few quarters, they have been operating cash flow negative because those typically are the weakest quarters. So when you see, or this company produces operating cash flow and free cash flow in those weakest quarters, the company has made it. The company has reached that important inflection point. Now, funny enough, they just mentioned here, Qoria's reported operating cash flow, 14.6 million for the quarter. Operating cash flow excludes capitalized software development costs. So that's very important to know. Those capitalized development costs are real costs. They happen every single quarter. So they're not just fake costs, they are real costs. I'm pretty sure there must be what I want to find. Short-term outlook. So really, here we go, financial highlights. This is where I really like what they've done here, this one. So what they've done is their operating cash flow. Is this the one? No, it's not this one. Oh, no, they have that. Yeah, this is what they've done. So they've got reported numbers, then they've got an adjusted cash flow. So the operating cash flow in their adjusted cash flow is only 10.6 million. and free cash flow is 6.8 million. The reason why that's important is because that adjusted cash flow actually includes capitalized research and development. They've already actually mentioned that below here. Reported operating cash flow excludes capitalized K-12 software development costs. I do prefer those costs to be in the operating because, in my opinion, they're operating stuff. Yeah, but it doesn't change the free cash flow, and they're still free cash flow positive. Is there anything else I like to? Yeah, this is another one. Cash flow analysis. Not only this quarter, the last 4 quarters, and by far this was the company's best quarter. Even if you compare this quarter to the last September quarter, this was a great quarter for the company. Now, in saying all that, and by the way, the market cap of this company is 509 million. It's a share price of 42 cents. So there is already a lot of I was going to say promise already priced into the share price. So there was a little bit buying in the closing auction at 45 cents. Now, there we go. So a little bit buying in the closing auction. And let's have a look at the chart for Money Me. No, not Money Me, for Qoria. And you'll see, if we have a look at the chart, share price had really taken off last month. There's a bit of a dip into August, after July. So maybe after July or the June quarter results, some portions of the market got a little bit upset and they sold off their shares in this company. And then the sub-investors came in and went, oh, you're selling because of that weak quarter. But we all know the September quarter is really good for this company. And more than likely, it's really good because they're aligned themselves to the American market. And schools open either in late August or early September. So schools want to be prepared, so they spend a little bit more money on this sort of thing leading into the September quarter. Anyway, so I actually thought the share price would have rallied, but because the share price is down, I think it was already priced in. The expectations of a really good quarter were already priced in. Now, interesting enough, what I'm going to do is put a fairly important level right there. And yesterday, it looked like the share price was trying to break up above that level, which is the highs the company share price saw back in April and May this year. And it tried to get above that level today and yesterday, but has pulled below back to 40. Actually, share price closed right on that resistance level at 45 cents, didn't it? Yeah, 45 cents. So share price is right on that level. That level is around about 45 cents. Interesting chart. We have started to see a bit of an increase in volume as well, but too many spikes, I think. So that could be institutions taking big positions in the company in the one day. Okay, so that's Qoria coming in at number 2. Coming in at number 1, we have Evolution Mining. Share price up 6.8%. When a gold company the size of Evolution, share price can rise 6.8%. That's pretty good day. This company has a market cap of, I don't know, 6 billion? Where is it? $9 billion, a little bit off. And so typically when a company releases their quarterly report and the share price is up 6.82%, typically it's because the mining, the production was better than expected. And in fact, I believe Capital Brief mentioned that. Where is it? Evolution Mining leads ASX Gold surge. I actually have a feeling they did say it somewhere here. Yeah, so Evolution Mining led a surge by gold miners on the ASX after reporting better than expected gold production in the September quarter. And that is why some of these type of reports are very important, because it tells us if a company is exceeding expectations or is falling short of expectations. And that means the share price can rally a lot or drop a lot. And that's exactly what's happened to Evolution Mining today. Their report, their gold production was better than expected. So the analysis now, what they have to do is change their models. They have to put no numbers in the models. And what the model is going to spit out is a share price or a target that is higher than it was before. That's why these sort of reports are important, because it changes future expectations as well and future targets as well. So let's have a look at the chart for Evolution Mining. And oh, this chart looks really good. A nice little breakout. Not a true breakout, but definitely the share price is an uptrend. And I'm going to look at the weekly chart. The last time the share price was this high was back in early 2021. This chart looks good. I like this chart. It's not quite the breakout we've seen in Bank of Queensland, but this is sort of like a confirmation of the uptrend that we have seen develop over the last few months. So a beautiful looking chart for Evolution Mining. No complaints. Now let's go and have a look at some charts that I did promise. First one is Challenger. They did release some sort of update today, and the market didn't like it. Share price down 4%. I can get rid of that 7.5% because I'm not trading this company. I thought it was a breakout, and the breakout failed fairly quickly. Then I sold. And I have no interest in this particular chart at all. Oh, what happened? I lost one of my moving averages. Oh, there we go. Just refresh solves all issues. So that's Challenger. Woodside, I didn't actually mind their quarterly report. I thought it was actually pretty good. And share price up a little bit, but it doesn't change anything here. When I look at this chart, I have got negative vibes. I have no idea how low the share price could fall, but I'm not seeing any sign of sentiment and the trend in share price changing at this point in time. Doesn't mean it won't change. Doesn't mean the bottom has been reached, but I need further proof of that. So it's Woodside. We have Pro Medicus. Was it the renewed a contract or something? Share price actually down. That's interesting. Share price is down, but that's okay. Share price is still in a really good uptrend. We have Pioneer Credit. In fact, I've already shown you Pioneer Credit. So let's have a look at Lunnon Metals. So I decided to actually trade this, a very small position. The whole reason why we saw some really good volume. We saw share price go up after that. Share price pull back on lower volume, and share price has increased the last few days. But the one problem I do have with the increase in share price the last few days is the lack of volume. I want to see higher volume because eventually that's what is going to drive the share price even higher is enthusiasm of the buyers. And the last few days, the volume has been probably weaker than I would like for Lunnon Metals. And BrainChip and Drone Shield. So we have seen share price of both these companies drop today. And in fact, BrainChip has just dropped off the cliff the last few days. I have no interest in trading BrainChip, just like I have no interest in trading Appen right now. But good luck to anyone who is trading this company right now. I would prefer some financial backing with the company, something to drive, some financial numbers to drive the share price higher. What's happening now, I think this is a trading stock for day traders. And they're getting out, seems like, the last few days. Share price has dropped from 32 cents to 24 cents. That's a 25% drop in 3 days. The last one was Drone Shield. I'm not looking at Drone Shield chart all that often now. In fact, today has been a negative day, down 8.4%, down to $1.04. And we're just seeing a run of really negative days for this company. Not sure what's happening, but yeah, I'm not trading this anymore. And one of the reasons why the massive down day in July, that was sort of like the trigger, sort of like the warning sign, sort of like the little tremor before the volcanic eruption. And I'm not a volcanologist. Anyway, and we haven't seen the share price recover since then. In fact, share price has fallen through an important level, which is $1.12. Last time it fell through that, it did recover. Just didn't take long for it to recover, but who knows? This could be the bottom. Dollar could be near the bottom for Drone Shield. Now, a few of your comments do have a little bit of time up my sleeves. So Big Boy Baby talking about the DGL's AGM. I have no idea. Did DGL have the AGM today? Notice of, okay. I'm not going to discuss that one. I'll just move on because I haven't actually read anything. Oh, Big Boy Baby also asked, XRG and SPK have not done what I hoped they would do. And he's asking what my plans are for those two companies. So XRG had a really big down day. When was that? That was the 11th of September, it was initially really good, and then the share price or shares were continually sold. And I thought there'll be a pretty good bounce. So I bought some shares at 3.5, share price now 3.3. I am just thinking of taking a small loss with this company because we haven't seen the share price bounce, a very small bounce. So I'm thinking of selling at a small loss for that company. And Spark, I didn't put what price I bought with Spark, and the share price just keeps on falling. We did have a little bit of bounce, but the share price just keeps on falling. There is possible value with this. So the only reason I'm not going to sell Spark is because there is possible value. And right now, the share price is not down all that much from when I bought. And maybe the bounce is around the corner. So I don't have a stop loss just yet with Spark. And it just hasn't gone. This is a very risky trade when you do think there might be some value, some good value, and there's possibility that the shares are oversold and you might see a bounce, and we haven't really seen that yet with this company. And the other thing, I think the other reason I bought is the really big increase in volume, and nothing really came from that. We started to see the volume increase as well. That could be another sign that there's institutions becoming interested, and that's what's ultimately that will be the driver of the share price higher if we see some institutions come in and they see some value with this company. So that's what I'm hoping for right now. But on the cusp, maybe not on the cusp of selling, but I am getting closer to selling this one. But definitely XRG, more than likely I'll sell out of that company because you have plans. The whole reason you have plans is if the plans don't come to fruition, you just sell, move on to the next one. So this is the future. If I could predict the future 100%, I would be the richest person on this planet. And yeah, so make sure you follow your plans. Make sure you have plans. Oh, here's the one, Shap Liquid. I think this guy is writing, or this person is writing this same comment in many of my videos. Can you have a look at Botanics and Opthia, please? Now, I don't know these companies much at all when it comes to their science, their technology. Pretty sure they're both pharmaceutical companies, but I could be wrong. And I'm pretty sure both or neither companies have much receipts, if any receipts at all. So if they have no receipts or very little receipts, these are still story stocks. So it's a story that's really important right now, and whether they can fulfill the rest of their story or write the ending of their story. And what I mean by that is this could be just the first book of a series of books. Like CSL has 50 books out there. Their first book was before they became profitable and selling any products. And maybe that book was really short for CSL. I don't know. When they're a CSIRO company, I don't know. But Botanics is in that first book. This is a story of stock. They have no revenue at this point in time. I think they don't have any revenue. I could be wrong. Just going to have a look at their most recent Appendix 4C. June quarter. Maybe they have a small amount of receipts, but I don't think so. $132,000 receipt. So well from even becoming profitable or generating any cash flow in the business. So $132,000 in receipts. So they're still burning through cash. The other thing I'll mention, and I'll say, actually do the same thing for Opthia. I can't tell you what this company does, but we have a look at if this company has any receipts. And I have a feeling the answer is going to be no. I could be wrong again. No receipts. In fact, this company burns through a lot of cash, $38 million in receipts, $162 million in the year. This company must have a really big, look at that, massive capital raisings, $159 million raised in the last year. This company must have a massive market cap. Opthia, what is their market cap? $1.12 billion. What do they do? Are they trying to solve aging or something like that? Develops and commercialized therapies primarily for eye disease. Opthia's lead asset, sozinibercept, is a soluble form of vascular endothelial growth factor receptor 3. Well over my head. Wet AMD and DME, so these are therapies they're dealing with, are leading causes of blindness in the early and diabetic populations. There you go. So I do hope this company succeeds, and seems like the market thinks this company is going to succeed. And look at that chart. I'll have a look at the chart in a second. Okay, so I know nothing about this company, so it's all about the story. What do you think about the story? What conviction do you have about the story? Do you have any conviction about the management, that sort of thing? Because otherwise, I've got nothing to add because I don't know these companies at all. The only thing I can tell you is the chart. Let's have a look at the chart for both. I have a feeling both charts look okay. Oh, but Tonics is starting to show a little bit of weakness. And I do have a line here. That's my sort of support level, which is about 31 cents. So the share price is just above that support level. I probably would become a little bit more nervous if the share price fell below 31 cents. You could even say if the share price falls below 34 cents, that could be another or your first level to become concerned. But it is showing a little bit more weakness right now. The most recent high was 44 cents, and that was reached back in about a month ago, 10th of September. Anyway, but overall, the chart still looks okay. But we have seen share price pull back. And whether we need to see some buying coming in. So share price pulls back, and then you want to see some buying coming in. So the market's saying to themselves, whoa, share prices pull back. This is good value right now. And the other thing is Botanics has a pretty high market cap, 672 million. So again, the market has high hopes for this company moving forward. Now, Ophthia, I do remember this chart because the share price has just taken off. Whoa, it's taken off. Share price has increased from $1.80 to $5.40. So it's tripled since June. And that's one of the reasons why the company has a large market cap. So back then, the market cap of this company was 400 million or something. Anyway, massive rise in share price. I'm not sure what's driven it. I'm not even sure where they are on the trial. What do you call it? Trial program. I'm not seeing anything here in regards to results, like trial results. They're just participating in a few conferences and symposiums, it looks like. And Ophthia wet AMD program to be presented at Innovate Retina. So there is a possibility that this company is well known around the world in regards to what they're doing. And maybe that's why their valuation is really high, because this is possibly a well-known company around the world. You have a look at the corporate presentation released on the 9th of September if you want more information on this company. But at this point in time, I don't have any information. I don't mind the chart. I do like the chart. But just be aware, share price has risen very quickly. So it wouldn't be surprising to see some profit taking right now. And we have seen share price did drop a fair bit yesterday. Even though it was only down 4.5%, from the high, it did drop even more than that. So a little bit of volatility. So both charts look okay, but there are some things to be wary about for both. And I can't tell you what to do. If you're a shareholder, it's up to you what to do. I think every single person, every single investor should make their own decision. And when the decision goes against you or for you, take ownership of your decision. There's too many investors out there who blame someone else when an investment goes against them. I see this all the time with those are sites that suggest or recommend companies. If that company goes badly, those people who use those sites then blame those recommendations. No. Take ownership of your own decisions. I will say that till the day I die. And everyone will become a much better investor if you just take ownership. Have a plan and take ownership. Oh, maybe I can do one more question. Ben Hutchinson says, I own up to selling out of Beamtree today. CEO departing and no replacement identified. Doesn't sound completely orderly. Hardly a vote of confidence by the CEO either. Prefer to watch from the sideline for a while. Can't disagree with you there. Okay, I'm going to... There was a... There we go, yeah. Chuck Liquid. Vote Dutton. Yeah. Not going to vote for anyone. There he is, another one there. Okay, now that's all I'm going to talk about today's video, because we are getting to an hour long, and I always want to finish about an hour at most. Anyway, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.